Do you trade breakouts? If you do, then you need to stop, because this is absolutely why you are not successful in trading. And I'm going to explain why at the end of this video, so make sure you watch it to the end. Now, I don't mean any disrespect to anyone that trades like this, but just hear me out on this, because what I'm going to show you will absolutely blow your mind. So let's get to it. There are different ways different people trade this strategy. It's basically called the breakout strategy, but I think it's generally called the London session breakout. What this basically means is people usually take the breakout of the Asian session, coming out of the Asian session, then during the London session you have a breakout basically, then you take that breakout and expect to make money. So here's how it works. We have our Asian session, right, which is basically 8 to 9 hours of consolidation. We have consolidation for 8 to 9 hours, right? So coming into London session, which is this box right here, you have a breakout, right, out of this Asian session. So what people basically do is they take the breakout, put their stop loss at the middle of the Asian session or below the previous low, and then expect this to continue up, maybe with the trend, right? In reality, this actually doesn't work. Or let me say, there are people who manipulate these markets and they know that people trade like this. People take the first breakout out of this Asian range and they know that people are buying here, right? Because the way it works is it stands on the foundation of support and resistance. So the top of the Asian range is resistance, while the bottom of the Asian range is support, right? So this is basically price bouncing off of support and resistance. When they break a resistance, what is it usually thought about this? That the resistance becomes support. So this has become support and people take the trade here, put their stop loss and somewhere here and expect to make money with this. So this doesn't work. Why? Because people manipulate this market. They call them big banks, smart money, market makers, because they are the ones that move the market with trillions of dollars, right? When you lose, these are the people who win. If you lose, they win. If you win, they lose. But they have so much money that your wins, don't affect their accounts, right? When you lose about maybe $50, $100, it doesn't affect their account because they control and move trillions of dollars per day. If you have been trading this strategy, have you ever entered a trade during the breakouts and then just for the trade to go in a little bit of profit and then this happens, right? And then they call this a fake out. This is done deliberately by these market makers, by this smart money, by these institutions who trade against you, right? So they have to trade against you. This, in other terms, can be called a stop hunt. What that means is you can call it a stop hunt. There are different terms for it. You can call it stop hunt, inducements. This is basically made to get you to enter a trade, because how do they take your money if you're not in a trade? You have to be in a trade for them to be able to take your money. So they get you to buy when their initial intention is to go down for the day. So they get you to buy. And when you buy in here, they will reverse the trend back against you, and then you see that they hit your stop loss. So I'm going to show you examples. There's a way this works. Let's say you have your Asian session range here. There are different ways this works. If they want to go down for the day, this is what they'll do. And then they'll end the day in consolidation to begin the next day the same way they started. And if they want to go up, they'll just do that inversely, right? Like this. All right, so let me just show you some examples. This is our Asian session. I have the boxes already. This is Asian session, the gray box. The first pink box or red box is London session, and then the third one is New York session. So this is our Asian session. We have our breakouts of this Asian consolidation here, right? So we can see, although this went a little bit far, like 30, 40 pips, you can see that same diagram I showed you is what they did, right? So they ended the day in consolidation again for the next day. So imagine you took a sell in here. This is what would have happened. They would have hit your stop loss no matter where you put it. And imagine you took the breakout to the other side, which is here. You got in here, put your stop loss here, show you a little bit of profit, and reverse back down, hitting your stop loss. All right. Okay, let's say that's a coincidence. Here we have our Asian session. We have our resistance and we have our support. All right, now look at this. If you're taking London session breakouts, you would have taken a trade in here, expecting them to go up. And here's what's funny. They went up for the day. So your prediction was right, but they manipulated all the way till New York session and then used news to take this up. Right? So your prediction was right, but it was basically manipulated against you because they don't want you to catch this move. Here's what they did. If you took a buy here, would have been hit with your stop loss. If you took a sell here on the breakout of this, if you took a breakout here, also your stop loss would have gotten hit. So that's another example right there. So this happens almost every day. You can see you have our Asian session breakouts. If you took this here, you got hit. If you took this here, you got hit again, and they went back up, and your direction was right, but they just manipulated. This is exactly, you see, this right here is exactly what they did here. If you copy and paste this, you'll see that this is the same thing. This is exactly what they did. Induce, and make their move back up. So here's another example. We have our supports and we have our resistance. You can see they broke out. This is to get you to sell. If you sell this, they reverse the trend against you. All right. So this is basically how it works. And I have a video that explains this more in depth. If you took sells here, taking the breakout, you'd have gotten hits. If you took the breakout here, you'd have gotten hits again. So they hit you both ways. All right. Here's another example. You have your supports. You draw your supports. You draw your resistance. Here's your breakout. Here's your breakout. Took this sell, you would have gotten hits. Took this on a buy, would have gotten hits. Ended the day -2. Okay, previous day, you have your resistance, you have your support. Took the breakouts, you'd have gotten hits. You can't take this. If you took this, then I don't know where you put your stop loss because the distance from here to here is quite too large. Another day, here's your resistance, here's your support. Took the breakouts, would have gotten hits. So that's how they manipulate this market, right? So my advice to you is do not trade London session breakouts. Instead, wait for the reversal. And I teach exactly that. That is my strategy. My strategy is I wait for the consolidation. I wait for them to break out, and then I look for a reversal back down, and I enter somewhere in here, sell, going against the masses. So 90% of people are buying this, while the small 10% who know what is actually going on in this market are taking this the other way around. So if you want to learn how to trade my strategy, if you want to learn how to trade like this, then you need to watch this video because I explain just that. And I'll see you on the next one.